Greetings everyone, my name is Joseph James. Here's your live stream recap, September 22nd, 2010, brought to you by schooloftrade.com, sidewaysmarkets.com. Now before we talk about the trades we took today, I want to remind you guys about our blog. If you're watching the video right now on the blog, there's a real important section in the top right hand corner. In the upper right hand corner, you see this section for Trade Room Resources, guys. Get to know the section Trade Room Resources. There's almost everything you need to know about the terms and the techniques and the tools we use in our live trade room. So if you come out and joining us as a guest, we offer a 3-week trial. Come out and experience the trade room, right? No obligation to buy at all. We love having new members, new guests in the room every day. And while you're there, ask lots of questions and use that section called Trade Room Resources, right? It's really going to help you guys out. Now, let's see how we did today. 2, 4, 6, 8 total trades. We took 8 total trades. You can see all winners today. We did a pretty good job, and a lot of our members this morning made some pretty good money along with us here. Now, as you can see here, we've really only been trading here for 1, 2, 3, 4, about 9 days this month of September so far. We had Fed Day yesterday, had nothing in, nothing out yesterday. Had to do some stuff yesterday afternoon, so didn't get a chance to do a video yesterday on it. But I'm back today, obviously, the 22nd of September. 180, or should I say 176 ticks. We had a couple winners on the Euro at 12.50 per tick on the Euro, 18.80 for the day today. So just shy of 1900 USD on 4 contracts. We took 2, 4, 6, 8 total trades. That brings our weekly total here to 3,700. Monthly total just shy of 8,000 USD, and of course we're just below the 141,000 mark on the year of 2010. We'll keep you guys posted. Let's keep moving. What's the most important that happened today? Well, the Fed Day or FOMC day, that was yesterday. So the markets were kind of still reeling from what was happening yesterday afternoon at 2:15 when the announcement came up. We had a little bit of a slow start, all right? So low volume, tight trading ranges. We didn't get very much going here in the early morning session this morning, but our patience paid off pretty well because we saw some wide ranges on the dollar. The dollar came down, tested the lows, bounced off the lows, and that's what obviously that bounce to the upside is what caused a lot of markets to begin to tumble, right? When the dollar bounces off the lows, the first thing it does is it brings everything else down with it. So we stayed to the short side. 10 a.m. the volume comes into the market. Crude at the highs of the wedge starts selling off. Gold at all-time highs started selling off, and of course we were shorting the whole way down. The euro and the dollar worked together nicely to push the euro into the new highs, and of course we'll start off on crude oil first today. So really had a slow beginning of the day. We had to wait till the volume came into the market. The volume really gave us a lot of opportunity after 10 o'clock. Now check out crude though. What do we see? I see a mess, don't you? This is a pretty messy chart. Crude oil has been a messy chart for the past couple of weeks here because you can see it's been going sideways, right? You've got this sideways range here. And so with the sideways range, we're going to have what I call the market literally tripping over each other. Okay, you've got trigger lines in the way, trend lines in the way, double tops, double bottoms. There's a lot of support and resistance above and below the current price when you see a market that's gone sideways for multiple days. So that was the big concern, first of all, here on crude. Now, besides that, though, we put together our plan of attack pretty nicely. What's the most important thing I see here? What do you think is the most important thing here? Well, first of all, there's your trendline high. There's your trendline low. And what is that? That's a wedge. Now, what do? We find where we are in the wedge. We're at the highs of the wedge. All right? So it may look messy, but try to define the basic pattern here. Okay, so we have a wedge pattern. I'm going to sell the highs of the wedge. So selling the highs of the wedge, it took us to get below the 75.60 right here. 75.60 is right there. We had to get below 75.60, and that is what kind of got us going here to the short side here. All right, guys, so selling the highs of the wedge around 75.60, that was the plan of attack on crude. And you can see this is exactly what happened. Now, we actually ended up breaking above this channel high here. We made new highs on crude, and then we were waiting for it to sell those highs. All right, now, high of day, low of day, double tops, double bottoms, doesn't really matter what the level of support or resistance is. When I'm at the highs, I sell the highs. At the lows, I buy the lows. All right, so here was my trading range here. Right, there's my trading range right there. And so, of course, if we come down, right, I'm going to be a buyer down here. Okay, I'm going to look for a 2-step reversal and buy these lows. At the highs, though, right, same thing. We're going to sell the highs. Look for the 2-step reversal of the highs. So here's my high of day. We're going to come up, we make new highs, okay, we bounce off those highs, and now I'm looking, of course, for the first opportunity to get into a trade here. Okay, this is right at 9 o'clock, crude just opened up, it moves up, tests the high of day, 76 even, and then what do? As we come back down, I'm looking for a swing low. There's my swing low, break below that swing low, and there's your entry for your two-step pattern short. All right, so once again here, very simple pattern, real simple pattern, right? We want to sell the highs at the high of the day. Okay, the first opportunity I got as we come up, bounce off the highs, come back down. As you can see, the first chance I get is right here, right? There's my swing low level right there. Then all I have to do now is wait for price to bounce and then break below that swing low. There's your first trade of the day. Okay, very simple. We call this a two-step pattern. 85 was my fill on it. Now you'll notice we got bounced out right here and then it tumbled even more, right? Now this is one of those examples where getting in early on a scalp, okay, actually makes you less money sometimes than getting in late as a day trader. Now, a lot of you members out there, you guys grabbed this thing short from 65, right? And you made more money on it, right? Nice big tumble down from 65 down to 45. All right, I was in a little bit early. I got bounced out early, got my first profit target of +5 filled. That's 10, right? 2 off at 5 is 10. And then you can see I got taken out of +2 here, right? When you move your first target down, when you get your first target filled, I move my stop down to entry. I move my stop down to entry, it comes back up and stops me out. So that's what happened here. Got my first target filled, stop to entry, got filled at +2, and of course 10 plus 4, right? 2 off at 5 is 10, 2 off at 2 is 4, 14 ticks or 140 USD. Classic example of shorting the highs, right? Selling the high of day here on the crude. That was the first trade of the day. Now we took 2 more on crude. They were both on day trading time frames. My